Airbus A320 software scare. Market fallout and cybersecurity angle in brief. A recent software glitch grounded thousands of Airbus A320 jets, not due to hacking, but a freak solar radiation event. The incident sent Airbus stock into a tailspin, while shining a light on cybersecurity stocks as potential beneficiaries. Below, we break down what happened and the investment implications across the aerospace and cybersecurity sectors. Short-term outlook. Days to weeks. The immediate concern is operational and reputational damage. With hundreds of A320s temporarily grounded during a busy travel season, Airbus faced unplanned costs and angry airline customers. Concurrently, the fuselage issue threatens to delay new jet deliveries. These twin setbacks have analysts cautious. As one report noted, the timing reignited market concern over Airbus's production stability and execution heading into year-end. Near term, expect continued volatility. Bad news is being punished swiftly. Until Airbus demonstrates that fixes are in place and no new shoes will drop, the stock could remain under pressure. Indeed, analysts warn the shares are likely to remain volatile in the coming weeks, given the heightened scrutiny on Airbus's tech and manufacturing processes. In trading terms, any further technical hiccups or negative headlines could spur day traders to pounce on short positions or quick sell-offs. Conversely, optimistic traders might watch for any all-clear updates as a relief rally trigger. But overall, the bias in the very short term skews bearish caution is prevailing. IMVZ.com, IB-SEO.UK, IB-COEK, medium-term outlook. 1 to 3 months. Looking into the next couple of months through the next quarter, Airbus's trajectory depends on execution. If the company swiftly completes all software fixes and the fuselage inspections with minimal disruption, confidence can start to rebuild. Airbus still has exceptionally strong demand for its jets and a record order backlog, fundamentals that could stabilize the stock once this storm passes. Some analysts note that the full-year delivery target, 820 jets in 2025, might still be barely achievable if December goes perfectly. However, meeting that requires a heroic effort. Over 160-plus jets in December, far above any monthly output in Airbus history. Each week of delays makes that goal harder, directly impacting revenue and cash flow recognition. IB-CO.UK. Given this delicate situation, investor sentiment for the next quarter is guarded. Airbus's Q4 earnings, due in early 2026, will be closely watched for the financial impact of these issues, increased costs, any penalty payments to airlines, and whether some Q4 deliveries slipped into Q1. If Airbus effectively contains the damage, e.g. final deliveries only slightly below target, and convincing fixes in place, the stock could stabilize or even rebound on relief that the worst is over. In that scenario, value-focused investors might view any 5 to 10% dip as a buying opportunity, betting on the long-term aerospace upcycle. On the other hand, if further technical problems emerge or the delivery shortfall is larger than expected, the stock could extend its slide into the new year. History shows aerospace stocks can lag for an extended period after major safety recalls or quality scandals. Consider Boeing post-737 MAX. While Airbus's situation is far less severe, the risk is that lingering technical doubts keep the stock depressed until the company proves its reliability again. In sum, short-term pain is evident. Medium-term outcome hinges on Airbus's execution in the coming weeks. For now, we'd characterize Airbus shares as short-term bearish, medium-term cautiously neutral, with the potential upside if recovery efforts go smoothly, or further downside if new complications arise. 3. Cybersecurity stocks. Opportunity in the aftermath, sector reaction. Interestingly, even though the Airbus glitch was not a cyber attack, it has indirectly cast a spotlight on cybersecurity for critical systems. When a headline like Airbus software flaw grounds 6,000 jets hits, some investors reflexively think cyber vulnerability. This can create a knee-jerk interest in cybersecurity stocks, a sort of flight to safety or opportunity in the tech space. Historically, cybersecurity firm stocks tend to get a boost after major cyber incidents, as companies rush to strengthen their defenses, translating into higher demand for security products. For example, a study of 53 large cyber attacks found cybersecurity providers saw statistically significant positive abnormal returns around the breach news. The logic: a big hack or IT failure serves as free advertising for the importance of cybersecurity, prompting investors to bet on firms like Palo Alto Networks or CrowdStrike, expecting a sales bump. Link.sprinter.com. Current context: not a hack, but in this Airbus case, the immediate catalyst wasn't a hack, so the direct fear trade into cybersecurity might have been muted. There were some speculative tweets and blogs initially wondering if a cyber attack was to blame, given the timing and scale of the fleet grounding. But as official reports uniformly pin the cause on solar activity, the cybersecurity angle shifted from specific threat to general awareness. The key insight is that even non-malicious tech failures highlight how crucial robust, secure systems are. Aviation, like many industries, is increasingly a cyber-physical domain. Software is integral to safety. A freak incident like this reminds executives and boards that resilience is paramount, whether against hackers or cosmic rays. That broader realization can lead to renewed corporate focus on cybersecurity measures. After all, if solar flares can corrupt a critical system, what could a targeted malware attack do if defenses aren't rock solid? From an investment standpoint, this heightened awareness bodes well for leading cybersecurity companies. In the days following the Airbus news, stocks in the sector saw no negative impact. In fact, the overall bias remained positive as the market digested that it was an environmental problem. One could argue there's a subtle bullish undercurrent for cyber names here. Investors hedging tech risk. Some portfolio managers may rotate a bit more into cybersecurity plays as a way to capitalize on, or protect against, the growing focus on system integrity across industries. It's a thesis of any news of tech vulnerability is good news for security providers. While the Airbus episode alone won't send cybersecurity stocks rocketing, it contributes to the narrative that you can't skimp on cybersecurity, even in tough times. Key players and trends. The cybersecurity sector has been a market darling in recent years, and current fundamentals are strong. Palo Alto Networks, PNW, for instance, has been reporting robust growth. Its revenue rose 16% year-on-year in the latest quarter, and it's aggressively expanding with big acquisitions, like a $3.3 billion deal for Chronosphere and a pending $25 billion buy of CyberArk, to broaden its platform. The company's strategy of integrating AI and offering a one-stop security platform has led to surging demand from enterprises consolidating their security vendors. Multi-product adoption is up sharply, and free cash flow is strong. All this has kept PAN with stock in an uptrend for much of 2025. CrowdStrike, CRWD, and Fortinet, FT&T, other major players, likewise have solid tailwinds. CrowdStrike continues to land new large contracts with its AI-enabled threat detection, and Fortinet benefits from its strength in network security appliances and services. Sector analysts broadly see cybersecurity spending as a top priority for companies, even if IT budgets tighten elsewhere. In other words, even in an uncertain macro environment, cybersecurity is among the last areas where CFOs will cut spending. The risks of underinvestment are just too high. CNBC.com, Zacks.com, GrantThornton.com. Given that backdrop, an incident like Airbus's can only reinforce the importance of robust systems. We expect cybersecurity firms to subtly leverage this case in conversations with potential customers. Look, software glitches happen. You need layered protections and monitoring to catch anomalies, etc. There may not be a direct revenue event. Airbus isn't suddenly buying endpoint protection because of this. But across industries, from airlines to manufacturing to infrastructure, it's another data point in why cyber resilience spending must continue. That sentiment supports the medium-term and long-term bullish case for the sector. From a trading perspective, in the very short-term days, there wasn't a dramatic move in PNW, CRWD, or FT&T tied to the Airbus news, because the market didn't treat it as a cyber attack. Any day trader speculation quickly gave way to the factual cause. However, in the 1 to 3 month view, cybersecurity stocks could see modest outperformance thanks to a steady drip of headlines about tech vulnerabilities, including this one. They also have their own catalysts. Many are riding high on strong quarterly results and secular growth trends, like AI security, cloud migration, etc. For instance, Palo Alto's outlook remains upbeat. It recently raised its full-year guidance for fiscal 2025, and investor enthusiasm is evident. The stock is up 25% year-over-year. Quarterly earnings effects for these companies are more tied to ongoing trends, subscription growth, renewal rates, new product success, than any single incident. But if we zoom out, every scare about system failures nudges the needle in favor of cybersecurity solutions. Thus, we wouldn't be surprised to hear CEOs of cyber firms gently reference the importance of protecting critical infrastructure in their earnings calls, using situations like the Airbus glitch as a talking point for why customers need to invest in prevention and monitoring. Finance.yahoo.com. Bottom line for cyber stocks. The Airbus saga underscores that technological risk is ever present, whether malicious or not, and that keeps cybersecurity in focus. We anticipate a bullish bias in the sector going forward. Leading cybersecurity stocks like PNW, CRWD, and FT&T are already benefiting from strong demand. This incident simply adds one more reason for investors to favor them. In practical terms, investors could see the cybersecurity sector as a partial safe harbor amid industrial tech uncertainties. It wouldn't be about a one-day spike, but rather a sustained confidence that cybersecurity firms will continue to grow as security remains a non-negotiable spend. As long as companies fear the next big outage or breach, money will flow into protecting their systems, and that means revenue for the cyber vendors. So, while Airbus scrambles to patch software, cybersecurity providers stand ready with the pitch that being prepared is better than being sorry. We expect modest upside in cybersecurity stocks in the months ahead, on top of the solid fundamentals already driving their performance. Investment implications and outlook. Airbus, AirFP, aerospace/airline sector. In the near term, Airbus faces turbulence. The stock's sharp drop reflects a loss of investor trust that will take a bit of time to rebuild. We rate the short-term sentiment as bearish. Any trading bounces aside, the overhang of the recall and quality snafu will likely keep the stock restrained. For medium-term investors, much depends on execution in the next quarter. Mitigating factors. Airbus's order book remains robust, and no airlines have canceled orders because of this incident. This isn't a 737 MAX scenario. If Airbus can execute the fixes and hit close to its delivery target, the market could forgive this hiccup by Q2 2026. But if further technical issues emerge, expect deeper scrutiny and possibly a longer-lasting impact on the share price. This event is a reminder that even top-tier industrial names carry operational risks. It may warrant a slight discount on Airbus's valuation until confidence is restored. Actionable view. Cautious investors might stay on the sidelines or pair positions until Q4 results clarify the impact. More opportunistic traders could look for entry points on excessive dips, banking on Airbus's fundamental strength to reassert itself after the dust settles. Cybersecurity sector, PNW, CRWD, FT&T, etc. Tech/security industry. The broader cybersecurity sector emerges indirectly strengthened in narrative, if not by any direct windfall. We maintain a bullish bias here, as the Airbus issue adds to the drumbeat of protect your tech that underpins cybersecurity spending. This is at the sector level. Individual stock picks still require looking at valuations and execution. But leaders like Palo Alto Networks, Platform Security plus AI Focus, CrowdStrike, Endpoint and Cloud Workload Protection, Strong AI Analytics, and Fortinet, Network Security Infrastructure, are well positioned to capture any increase in security awareness budgets. In terms of time frame, day traders might not find huge volatility catalysts from this story alone in these stocks, since it's not a direct breach. Month to month, we see these stocks continuing their generally positive trend, potentially getting a sentiment boost if there are any cyber scares, or if macro turns choppy and investors rotate into defensive growth like cyber. Quarterly earnings for these firms should remain on track. High growth rates and strong renewal metrics. And we'll watch if management comments connect the dots on rising risk awareness, translating to pipeline strength. For investors, Modest exposure to cybersecurity remains a prudent strategy in an age where an unexpected glitch can roil an industry overnight. This sector provides a hedge against exactly that kind of event. Conclusion. The Airbus A320 software saga has proven to be more of a technical snafu than a nefarious cyberplot, easing some worst-case fears. However, its ripple effects in a market were real, denting Airbus's stock and subtly boosting the appeal of cybersecurity plays. In the fast-moving world of tech and aviation, it's a case study in how not all disruptions are hacks, but all disruptions do have consequences. For Airbus and its investors, the mission now is to execute fixes flawlessly and regain trust. For cybersecurity providers, the mission is to stay ready and relevant as industries grapple with complex technological risks. And that wraps up this analysis. If you enjoyed this episode, please like and rate the podcast, subscribe, and if you feel like it, download the show and visit our sponsored snacks page, https://mydeals.page/i76j. Thank you for listening, and stay tuned for our next deep dive.